Hi, I'm Marilyn Marks with Nick Shehu Property Group. I'm a realtor here in the greater Austin area. And today we're going to talk about a topic that's been on a lot of people's minds, which is interest rates and how that's working with inflation. Now, we know inflation's on the rise. You've seen it at the gas pump. We're seeing it at the grocery store. And with that, as inflation goes up, interest rates tend to go up. We've seen interest rates on the lower end. Last year, saw a lot of clients around 2.5%. I'm now seeing interest rates around 3.75 or 4% or a little over that. There are a lot of factors that go into how your interest rate is calculated. It's a part of your overall pre-approval when you talk to your lender. So keep in mind things like your credit score go into that. And then also at the end of the day, how much you're going to put down as your down payment goes into that as well. Because the lower down payment means a higher risk for your lender, it could lead to a higher interest rate for you. So what we're going to do is calculate what that looks like quickly in a calculator here. Let's say we've been house hunting, we find a home that we love, we're ready to move forward with it. We're looking in Elgin. And if you haven't been to Elgin, you should. There's great barbecue, small town charm, commutable to Austin, lots of good things going for it. And the list price on this one is $350,000. I've already calculated that into the Dave Ramsey mortgage calculator. Super helpful tool. And again, of course, if you have questions, you always talk to your lender as well. But this is just a quick example. So let's say, just looking at interest alone, that you're not going to put any money down. The loan program you're doing, let's say USDA, is a 0 down payment. So just looking at interest here with what we were seeing last year, if you didn't put anything down on a house in this general price range, of course, I've calculated things like the property tax into here and your HOA and your dues and your homeowner's insurance. But if we didn't look at anything else and we just looked at the interest rate, I want you to see how it goes from this number, this 2,400 here, to what I'm now seeing a lot of people at this 3.75, which is 2,700 to 4.3, which is what a few of my clients have had lately, to a little over 2,800. That's a huge jump. Just looking at interest alone makes a major difference on your payment. So now what can we do to help make that look a little bit better? Well, we're going to talk about different loan programs that you could do. We're going to look at, let's say you do an FHA loan, which is a little over $12,000 down. It's 3.5% down. And we're going to calculate it as if it was going back again. We get the idea. Last year, where we were seeing around 2.5%, that was a little over 2,400. Again, we get the idea. We're going to jump up to what a lot of clients are seeing now, which is 2,700. And that makes a major difference again on what you're going to pay per month. Now, what if we calculated this on a standard conventional loan? A lot of people think with a conventional loan that you actually have to pay 20% down. You don't, and you can talk to your lender about that, but it does help because without it, you have what's called private mortgage insurance over here. And it's a little bit extra per month until you pay that magical 20%, and now it's gone. So you don't have to pay extra per month. But again, we're going to get the idea. We're going to go back 2.5% down, which is what we were seeing for a lot of people last year, a little over $2,000 payment versus, I'm going to go on the higher end, 2,300, a little over for your monthly payment. Putting down a down payment coupled with this higher interest rate makes a major difference if you can. Everyone's in a different situation when they look at purchasing a home, but considering coupling interest in your down payment amount, just thinking about that as you're looking at purchasing changes what your month-to-month life would look like. So if you have any questions about it, our goal here is to help you find the best home for the best price for you and help you get what would look like the best payment per month by getting you connected with a lender if you haven't done so already. We do expect interest rates to go up. We don't know exactly what that's going to look like for the rest of the year, but there is an expectation that it's going to continue to increase. So again, if you have questions, now is a better time to start at least considering looking around than waiting until they continue to jump up again. Happy to help with that. I'm happy to help answer anything you have. Again, my name is Marilyn Marks. I'm with Nick Shehu Property Group, and I hope you all have a great day.